Wow, look at this audience. And I heard some of you guys have been here for hours. So we're going to start and finish strong since we're the last panel of the day. I want to thank all of you for being here. We've got an amazing, diverse group of leaders from across sectors. First, I'm going to start off by asking each one to just give us a sense of what progress has been made from your organization, and more importantly, first to start off with just who you are and what organization you represent. I'm going to start with Roman first.
Sure. Roman Regelman, I lead security services for Bank of New York Mellon. We are 238 years old, and we believe in innovation. That's why we're here. But thank you to Mass, thank you to Singapore for hosting this thing in person this year. It's my 5th consecutive FinTech festival, but I missed obviously being here in person for the last 3 years. And it's great to be with this panel. I know all of you, and I'm really looking forward to the discussion.
Excellent. Michael, you're up.
Yeah, Michael Shalov. I'm the CEO and co-founder of Fireblocks. We've been only 4 years in this space, but we sort of, for those who are unfamiliar with Fireblocks, we basically provide platform and infrastructure for digital assets for the institutional part of the market. So, financial institutions now with Web3, it's sort of expanding to other type of Web2 companies. Excited to chat about the topic.
Fantastic. Joanne.
Yeah, I'm very pleased to be here. I'm Joanne Hannaford. I'm the Chief Technology and Operations Officer for Credit Suisse, based in Zurich. I've flown here today to speak to you. I'll just remind you a bit about Credit Suisse. We're 165 years old, 50 years. We've had a presence in Singapore. We are the world's second largest wealth manager outside of the US. What I like about Credit Suisse, and it's very pertinent to this topic, is that our founder created ETH, which outside of MIT is one of the world's leading technical colleges, but also founded and created the Gotthard Tunnel, which if you've ever lived in Europe and you've been through the Gotthard Tunnel, you know it's 60 kilometers. It's huge and a major engineering effort. And so that engineering discipline, is very applicable to this conversation today.
Fantastic. And Chris.
Thank you. Chris Young, I'm from Microsoft. I lead our business development, our ventures teams. Microsoft, not quite as old as some of these institutions, but old for technology.
Yeah.
On Web3, we're an infrastructure provider. We touch this space in a lot of different ways, and so look forward to talking about it on the panel today.
Fantastic. So now, we've got a very diverse group of leaders. We are talking about this transition from 2.5, Web 2.5 to 3.0. And what does that really mean? And we're going to unpack that today. But I want to start off with what has each institution done in the last year or so that you would consider a major milestone, an indication of progress being made? And Roman, I'm going to start with you.
Sure. So I'll start with the answer. We launched digital asset custody in the US, and we are the first GSIFI, which is a globally systemically important financial institution, that launched the digital asset custody offering. So that's the big news, but this is just the beginning. In many ways, we see digital assets as a new asset class. We also see that as a foundational technology. And both things are equally important, and I'm sure we'll talk about both of them as we go through the panel. If we talk about the digital assets, whether it's a conversation focused on Bitcoin or Ethereum in the last couple of years, fundamentally, if we think about all the offerings with tokenized assets, the opportunities are really limitless. They're limitless for our industry. They're actually limitless for end consumers. Think of opportunities of investing in a different geography, in a fractionalized basis, frankly, in a way that you could not invest before, and moving in and out of the assets. And we really believe that it comes from taking traditional assets and digital assets and putting that together. But we also believe in working with large technology companies, with fintechs, with clients. I mean, this is an amazing panel for me because I have all my stakeholders here at once. And frankly, kind of doing that in Singapore where the appetite for innovation is really high. So that's my quick answer.
Fantastic. I wish we could say we had choreographed this in favor of Roman's multi-stakeholders to be here. It was more of a coincidence than anything else, but it's good to know that you've got all your stakeholders here on this panel. Chris, I want to go to you because you are a behemoth. You are a major technology company that has been around for decades and, as you say, well established. How are you going to transition? What progress have you made that you want to share with the audience today?
You know, I would say the biggest progress we've made in this space is to actually get in it. I would say Microsoft is probably not, for a lot of you, you probably saw Microsoft on the panel, and you're probably asking yourself, well, why is Microsoft on the panel? We don't see them as much in the Web3 space. And part of the reason is, I would say a lot of the more established infrastructure companies haven't moved as quickly. But over the last year, you know, we set a few goals for ourselves. One goal is we said we need to be close to the innovation because there's so much happening in the space, and Roman talked about that. Obviously, Michael's doing it. I mean, this is happening in a lot of different places. We also said we need to enable the ecosystem to be able to run on our platforms. And so, you know, we've taken an approach where we've added a number of partnerships. Actually, Fireblocks is one of them. We work actually together with Fireblocks and with BNY Mellon. So we have we do have a network of partners here on the panel, not planned, as Roman said. And that's just the beginning. We've also begun to make investments in a number of Web3 companies as well, some very early stage. And it's really, for us, we touch it across the board. And so for us, the innovation, enabling partners is core to our strategy and how we're thinking about it.
Fantastic. And I'm going to head over to a venerable bank, Joanne. How have you guys been looking at it from a Credit Suisse perspective?
Yeah, I mean, I think we can answer that question in two ways. One is the opportunities that Web 3.0 presents, and then let's just talk a bit about some of those infrastructure components which, you know, are almost independent of Web 3.0 exist and don't exist in 2.5. So let's just talk about digital assets. You know, we are a significant retail bank in our home country in Switzerland, and we're also a wealth manager. The amount of interest that our clients have in the metaverse, in digital assets is breathtaking. And, you know, they want access to those types of features through their investments. And so for us, similar to, as Roger was describing, offering custodian capabilities, offering the ability to access these types of investments are something that it's hard to imagine a financial services firm would not adopt that. But the more interesting story for me is around, you know, Web 3.0, which is, to me, Switzerland represents, and as an engineer, I'm very interested in this idea of trust. And I don't mean trust between individuals, but trust of your data, trust of your systems, trust of the lineage. And if you think about the history of Switzerland and the culture of Switzerland, from our clients, you know, those notions and the infrastructure that we adopt to support them are very, very much interlinked. And I see that as a tremendous commercial opportunity for us. And so if you think about the idea that you have a digital wallet, you know, and you want to make sure that your digital wallet is protected, when you think about Web 3.0, you know, those types of principles, and I can talk more about that, are very important to us.
Fantastic. And Michael, I think you're very uniquely placed to give us an update on where you think sort of some of the incumbent institutions are in this sort of transition, because you work with quite a few of them. So could you speak to that?
Yeah, so from the beginning of the year, we onboarded about 600 different clients, right, to our platform, that all of them are, you know, doing things on the spectrum of digital assets and Web3. To be honest, I think that one of the important things is actually, like, you know, to define exactly what is a digital asset, what is Web3, and for us, everything that is kind of financial, it's digital asset or DeFi, and Web3 we usually refer to use cases that are actually non-financial use cases, right? So when you think about a ticket that is issued as an NFT, when you think about how merchants are able to now interact with loyalty programs, when you think about what gaming companies are currently doing, this is for me much more of kind of like the Web3, whereas digital assets is more, some of the things that Roman was talking about earlier of how do we bring a lot of the, financial instruments to run on the blockchain. So, within that spectrum of hundreds of clients that we onboarded this year, we definitely seen kind of an interesting momentum where in 2020, 2021, most of the interest was really around the speculative aspects of crypto, right? Like, Bitcoin was going through the roof. People were really interested in doing that. People were interested in liquidity mining around DeFi. The interesting thing about this year, as things sort of calm down after the Terra Luna issue, is that we're starting to see actually the real use cases, right? So people like Bank of New York Mellon are coming in and building infrastructure that really transforms the way that finance is operating and creating efficiencies, creating openness. A lot of use cases around payments with stable coins. We just launched the partnership, basically enablement of WorldPay FIS and Checkout.com and a few other payment service providers that are able to capture efficiencies of cross-border settlements through stable coins. And then actually when we look at the Web3, there are really interesting things that are happening over there in terms of clients that are doing. We have a few big clients in the gaming space that I still can't disclose that they are working like basically AAA studios that are working on games that will embed NFT-based economy. We have a really small startup out of Argentina that is doing airline tickets through NFTs, that instead of canceling the flight, you can actually transfer the ticket using NFT to someone else, and they can take the flight on your behalf. And the interesting thing is that apparently for the airline companies, when you cancel the ticket, they need to debook it. When you transfer it using a smart contract, they are actually able to capture part of that transaction and kind of increase the price for the ticket. So there are a lot of really interesting initiatives that we are seeing across the board, and I think it actually some of the most exciting times that I've seen this industry, because we really seeing the industry sort of exiting the speculative stage to the real world use cases.
Fantastic, and I really appreciate you pointing out that things that solve real problems, remove frictions, and can actually be win-win for both the company and the consumer is amazing. I love that airline idea, ticket transfer concept. I'm going to go to Chris here. If you could just talk a bit more, let's talk about the clients, because ultimately clients pay for your products and services. And I would imagine all of our leaders here listen to their clients. What are some of the insights that you could provide us around digital assets or Web3 that you've been hearing from customers that you deal with?
Yeah, so I'll actually divide it up, because we work with the consumer, as we also work with enterprises like Credit Suisse, like BNY Mellon. And what we're hearing from, I'll start with enterprises. We're hearing more and more, as Michael pointed out a minute ago, of the interest in starting to build out some of these real world use cases. More and more demand for being able to issue and hold digital assets. Like that's a really, really important use case that's growing and becoming something that we're hearing more demand from, more pull from a lot of our more traditional customers. That's mostly on the banking side. And Michael touched on this. There's retail customers who are starting to look at loyalty programs. A lot of the consumer brand companies, again, a lot of this started last year when there was a little bit more of a hype cycle, but a lot of the consumer brand companies are continuing to invest in sort of NFT companions to a lot of their most popular brands. Nike is a great example of this. You see companies like Starbucks that have launched an NFT program. And this is just the very beginning I believe, a lot of derivative programs that are coming out of these initial forays these companies have made
Yep.
into the space. On the consumer side, the demand is simple. In the browser, they want access to different wallet technology. In gaming, for example, they want access to digital assets. So we see sort of the demand for the use cases growing on both sides, both in consumer as well as in commercial. And as Michael said, I think some of the hype has come out of it, but certainly the demand is growing.
Fantastic. And Joanne, you already mentioned client feedback, but if I may ask, if we were to specifically ask around private wealth management clients, your clients that as businesses or as individuals have some significant resources, what types of things are you hearing?
I mean, we actually had an event at ETH in Zurich recently on the metaverse, and we created our own metaverse. I need to distribute it actually to people, but you could go in and see the Credit Suisse universe, and our clients you could see they were trying to work out, this is really, early days, I think, but you could just see how they were thinking about, is this a disruptor for education? Should we be creating investment opportunities for them to think about these products? Are they really real? I mean, and the same applies, I think, from an investment perspective for Web3. I mean, I absolutely agree, with your points about the disruption in financial services. So if you think about the cost of financial services to our clients, fintech has never really disrupted the kind of back end, the core settlement processes, the core margin processes, the core collateral processes, they pretty much stay unchanged. And I'm really hopeful that as we deal with this question of trust and interoperability, I mean, I think of Web3, I think about interoperability. And I think of interoperability between financial services firms, between our clients, but also, and I hope we could get a chance to discuss this, the interoperability between central banks. Which, if you think about the value of a digital currency, the value is a really important element to our clients. We're an international firm, our clients are very international. And so, the values are established by central banks of any currency, regardless of whether it's a digital currency or not. And if central banks can work out interoperability, one of the most expensive things today is an international remittance. Typically that's 6%. It's enormously expensive to move money around. And so for us, those opportunities to really think about, that interoperability in a global firm and a global wealth manager, I mean, are enormous for us.
Absolutely. The cross-border remittance costs and frictions remain, and anything
despite
do,
these companies, Sandra, it's never gone away. It's still 6%, isn't it?
Anything you can do, Joanne, we appreciate it. Roman, let's move on to the tokenization of pretty much everything.
Yeah.
And from your business perspective, you are an incredibly large and diverse set of business lines. How do you look at how you will adopt the digital assets, the tokenization of everything? Will it be business line by business line? Will it be a much more holistic global approach all in? Talk to us a bit about that.
Yeah. So I think the answer is both, but let me be more specific. When we talk about digital assets, everything that we do, from custody to accounting to trading to collateral movement, all the same things will apply to digital assets. In fact, we really believe that what clients need, what institutional clients need, is conversions of traditional assets and digital assets. Who wants to have one set of infrastructure for traditional assets and completely different infrastructure for digital assets? In our business, clients invest in different asset classes. Imagine if you had your stocks and bonds being on a different platform. That would be very strange. So I think at some point it'll be very strange where you have a digital assets and traditional assets and different platforms as well. So that's the conversions. At the same time, different use cases get born out of digital assets. Ability to tokenize everything and distribute everything are very different. I mean, today, if you want to invest in real estate, let's say you look at You travel around the world, you say, I really believe in commercial real estate. And I don't want to invest in the largest building in each city. I want to invest in the second largest building. And I don't think the penthouse is the way to go. I want to invest into the floor right below the penthouse. That kind of instrument is very expensive to create. I mean, maybe Credit Suisse can create this instrument for you, but that requires a lot of work. In traditional assets, that's kind of how we're today. In digital assets, if we tokenize everything, it'll be much easier for Credit Suisse to actually create this product for you. It will be much easier for us to do everything we do in asset servicing, in trading, to help clients actually process these transactions. So that's where the opportunities come. So it's not just an asset class by itself. It's the technology that unlocks other use cases.
Absolutely. And Michael, you've already talked a lot about that, but are you in the camp of everything is going to be tokenized and we're going to have this amazing world of being able to do lots of different things we can't do today?
Well, we kind of sort of like, yeah, kind of bought into that vision. Look, I think that inherently it makes a lot of sense that eventually most of those assets will move to be represented in this shape or form on the blockchain. I actually think that beyond the specific representation of the asset in the blockchain, just basically like to follow on what Roman said, the biggest actually, or the most interesting aspect over there is really what we call today DeFi, right? But how do we essentially take market functions, right? Like, exchanges, clearing, lending, borrowing, and all that kind of stuff, and we created it, we are basically bringing it into a much more autonomous, constructable systems that I think, the way for me is the way that I think about it is it's essentially like, what the iPhone or what the App Store is actually for the iPhone, right? When the iPhone was created, everybody looked at it, oh, okay, like, this is like a smartphone, right? But at the end of the day, the set of capabilities that were built into the technology, the GPS, the camera, the touch screen, right? That was actually what enabled this unbelievable creativity, right, that we all experience through the App Store, where you have developers all over the world just creating things that you use and you discover them on a daily basis. That doesn't exist in finance, right? I mean, to create fintech, to create financial products, it's beyond the regulatory questions that I think are very important, because I think that a lot of things that are currently unanswered is around customer or consumer protection, where there is still like, a pretty important gap in terms of regulation. And by the way, Singapore and MAS are actually, like, I think, globally the most forward thinking about how to create something that provides consumer protection on that. But I think that the fact that we're going to unleash that creativity into the financial system is going to be huge. And we're seeing it today, right? I mean, just, if you look at what's happening in DeFi, some of the blue chip protocols over there, Aave, Compound, Uniswap, MarketDAO, and so on. It's like financial innovation that I don't see any other way that it could have been created on traditional rails. And I think that once we will have more, financial institutions basically coming in, deploying assets like real world asset, it's just going to explode, because, of course, it's kind of interesting of how you're going to do it for Ethereum, right? Trading Ethereum against, I don't know, some other token. But when you actually have bonds, or when you have a real estate, or when you are able to create this kind of fractional basket of the apartments under the penthouse globally, right? Then you can borrow against it, you can lend against it, you can provide global access. And the fact that, by the way, someone who lives in a fancy apartment in Manhattan has the same access to the financial product as someone who lives in Kenya, it is going to create creativity that we haven't seen so far.
So I love the promise of all of that, but today we've established that there's work in progress. How do we get to that place that you've just laid out, Michael and Roman? You've laid out this world where You can tokenize everything. Financial products are offered to all kinds of people. It's very much democratized, hopefully standardized. Sounds great. But let's talk about some of the gaps and what future forward we need to do. So I'm going to start with Joanne, because representing a major bank, you must see that there are gaps out there in order for us to get there.
Yeah, I mean, we are regulated. We don't have the opportunity to, dive into new technologies which don't meet, the protection requirements that have been outlined. And so how do you get that balance? How do you be in the driving seat? Now, the thing that makes me most hopeful about this technology is it is resilient. So let's just put the resiliency concerns to question. And the second thing is, if you read the material from the central banks, they are taking this very seriously. There are, you'll hear it in Singapore, you'll hear it particularly the countries in Asia. The central banks here are doing blockchain trials. They're trying to solve this interoperability question, which could be solved by blockchain. There are, I would say, their initial results are teething, particularly around privacy. And, part of the inherent features of this technology is its openness. But of course, some people do want to be private. And, that's an intrinsic part of financial services is that you opt in and can opt out in terms of you decide your privacy settings. Yep. And so in many cases, if you think about Web 3.0, it actually is very consistent with that. But the current technology doesn't necessarily support it. And if you read some of the findings from MAS, you read some of the findings from the central bank in Thailand, that's some of the issues that they're raising. I think it's amazing that a central bank and central banks are driving this agenda in this way. They absolutely see this opportunity to kind of globalize how we think about investments and globalize the access to it. And that I've never seen before, not in my career.
Joanne makes an excellent point. For anyone who's been in banking sector for decades, it is a bit unusual to say the central bankers are the innovators in this space. Absolutely, yeah. And MAS is right up there.
Yeah, so. Absolutely is, yeah.
Yeah, absolutely. Chris, sitting from your very interesting infrastructure standpoint, where are the gaps? And how are you guys going to get over that?
Well, I first of all, I agree with a lot of the points Joanne made on some of the gaps. The other one, at least one other I'd highlight is the trust gap. Like in a way, it's an interesting duality for like blockchains, if I take that. Whereas in a way, blockchains are there to try to create trust through transparency and through the method in which it's applied. On the other hand, at a macro level, if you take the layperson's perspective, right now people don't trust digital assets, right? They don't trust Web3. There's still too much focus on some of the hype that we've seen the last couple of years. There's still a lot of focus on cyber attacks and breaches that we've seen. Some of that's related to the immaturity, right? So there's a lot of work that we have to do to create better developer tools. There's a lot of work that we have to do to create better resiliency in what we're building. We have a lot of work to do to create better trust and transparency so that we can fix a lot of the problems. Because if you compare where we are in today's digital asset journey versus like traditional financial services, we've just had years and years and years to work on the security models, the resilience models, the trust models. Everything we've done there is very well tested and trusted. In the digital space, we haven't gotten there yet. We're still early, and so we've got to build that capability. And I think that's going to be a big category that's got to move forward if we are to really realize the potential we've been talking about.
Thanks for sharing that. And in our last 10 or 11 minutes, I promised to take Q&A, and they promised me that this was idiot-proof, but I have managed to lock myself out, apparently. So I'm going to read from the screen here, and I promise you, trust me, the most popular one is going to be read first. And the question is, are the technology chasing for problems from fintech to Web 2.5, now Web 3, and so on? Clearly, someone's giving the more skeptical view, and I think that's very valid. So, Michael, how would you address that? Is this technology just chasing after the problems? Is it really doing anything?
Yeah, I think it is. I think that it does. It actually chasing after really big problems, right? I think this is the sort of to follow up on the previous question here. I think in many aspects, this is kind of like, the biggest social economic experiment that has been done in the, I don't know, last century or something like that. And it takes a lot of effort to change the existing systems. I think we all sort of experiencing in the day-to-day and interacting with financial services with, how our data and how our information is monetized or locked in online. And this technology is chasing after really, really big problems, and to bring them into, to basically solve it or to get there requires a lot of effort, requires time, requires the regulators to be involved in order to do it in a secure and sound way. So I think it does.
Absolutely. Over to you, Roman. Do you have any thoughts on that question?
I mean, technology is chasing problems, but problems in some ways are chasing technology. I think Chris talked about trust. For a while, there was a dichotomy in this industry. People talk about trusted institutions, and they stayed away from digital assets. And then, they talked about innovative institutions that were competing in a new space, but maybe staying away from more traditional banking services. I think what we're seeing now is really convergence. I mean, we've been in the business for 238 years, and what we learned that trust is absolute. The clients need to trust you, the partners need to trust you. But trust is not only what you have today. Trust that you'll be there for me tomorrow, you'll be there for me to help me innovate and future-proof my business. And that's where innovation comes in. So technology is chasing problems because there is always somebody who is competing with you. But at the same time, when I said the problem is chasing technology, that we have a new use cases. And technology can actually solve these use cases in a way that we could not solve with traditional assets or the first generation of internet.
Absolutely. And I think a really good test of whether a technology and or pretty much anything will withstand the test of time is in downturns, economic downturns, and trials and tribulations, as I call it, as we run this massive experiment. I think we need not be afraid of the fact that it's a little bit messy right now. It's a little bit all over the place. Eventually things will shake out, and the ones that hopefully will remain are the resilient groups, organizations who can be trusted to actually withstand the tough times. And I would say, Chris, going back to the question around the tech, as a technology company, did you guys internally have discussions around whether this tech was actually just chasing problems or not? Have you had that journey?
Look, if anything, that was probably the biggest dialogue that was going on the last year and a half or so. How much, how real is this? And,
right.
Obviously, our people look at all this the same way that the rest of the world does. We see the challenges, we saw some of the hype. Obviously, we have a big gaming business inside of Microsoft. The gaming community had quite a backlash against like NFTs and digital assets used in gaming scenarios. So there were a lot when we got really focused on this topic in earnest internally, there was a lot of debate and dialogue around the space. And some of it is, the space is vast. There's a lot of different ways you could, as Michael started to do, like define Web3.
Yep.
And so the first exercise we had to go through was just kind of cutting through some of that, defining some of that. We had to figure out what were our principles, like what did we stand for. For example, we've made a lot of commitments as a company to sustainability.
Yep.
And so, obviously, digital assets haven't gotten the best reputation in the market for being sustainable in terms of how they're created and maintained. And so these were all debates we were having internally. And so my view was always, and I think we've arrived at this place, is that, look, we have to be close to the innovation in the marketplace. If there's anything we know, when developers and capital are starting to chase a certain category, like you will find disruptive innovation there. And if we want to think about the business of tomorrow, like that's where we believe the world is headed. And as Michael said, we're seeing a lot of the real use cases starting to happen now. You and I were talking earlier about using sustainability as an example. For example, sustainability credits is a real use case that I believe is going to be defining for this category. And so these are we've been just giving you a few examples over the course of this last panel on what we see, but I think the opportunity is real, and we absolutely had those debates internally when we got started.
Absolutely, and I will toot Chris's horn. Microsoft has actually been instrumental in coming up with blockchain agnostic tokenization frameworks that are completely open source and available for anyone that wants to just pull it off the shelf and get going. And so the work that groups like Microsoft have been doing are actually really critical to laying the foundations to scale and standardize, so appreciate that. And Joanne, you had a question which I did see on the Slido, and I'm going to bring it up. It was directed at you. It was about how you see the technology being used to improve internal banking processes. I think there are probably a myriad of different use cases, but please.
Yeah. Look, most banks have a big line drawn down their middle. They have front-end processes which are closer to the consumers, and consumers could be, in our case, it could be a hedge fund, it could be an institution, it could be an individual person. And those processes, particularly as we pivot to more services and more APIs, they are much more modernized than the back-end processes. And the back-end processes are very traditional. And when you think about the technology we're talking about and Web3, I think one of the, my lifetime as a programmer, one of the things that I've seen is the fact that, our current version of the web and how we interact with other institutions like our own has not really been disrupted. I think if you go back to kind of Tim Berners-Lee view of the internet and what we have now, it's highly managed. It's not that easy to participate. It's not that easy to actually disrupt how we communicate. And when I look for Web3, I see huge opportunities for different ecosystems to arise. And I don't think as a financial institution, we would embrace that. We don't see these processes as being efficient. If you think about SWIFT, if you think about the way that we make payment instructions, if you think about, some of the fixed protocols with trading, these are long established protocols which are really difficult to change on our, Web 2.5. In the same way, by the way, it's really hard for you to break community guidelines or to, create social networks beyond the very managed social networks that are there. So in a way, there's an interrelationship between these topics.
So we've down to our last 2 minutes, and I'm going to do a lightning round.
Oh.
Name your favorite, what you get most excited about subtopic within Web3 for next year and beyond. So Roman, up.
I think I already said tokenization of everything. It's really going to unlock different use cases. And in some ways, it will provide access to individuals and institutions around the world to financial instruments that we don't have access today at a different speed. And frankly, if anything is really changing the world, not just financial services system, that's that.
You heard it here. Roman and BNY is going to enable tokenization of everything. All right, Michael.
On-chain identity and programmable compliance.
Ooh.
It's really,
compliance.
I think that this is basically what will help us to get the regulators on board and create kind of the programmable rule sets that will unlock and help us to get to, where we're supposed to get.
Excellent. Well done. Joanne, what excites you most?
I get excited by the idea of a single world currency with central banks participating in a single blockchain with single value supported that currency.
Imagine all the frictions that would be removed if there were a single currency. We shall see. Thank you. And Chris, please bring us home.
Well, look, we're excited to be in the space. and I'm excited about really the democratization of finance to the underbanked and to the people who we want to include in the financial system. And so this is an exciting way to do that.
And in the last 15 seconds, I will say I concur with Chris. I don't know how it is here, but in the United States, it is very expensive to be poor. And we need to change that.
Yeah.
Thanks very much. And thank you to the amazing leaders today. And thank you all.